break free from the mental traps holding your trading back. Welcome back to a brand new video brought to you by Funding Frontier. My name is Ryan Cruz and we're going to be going over a masterclass in trading and psychology in this session. One of the most important aspects when trading and psychology, you have to understand the trading and psychological triggers. One of the most common trading triggers is greed. Now, because we're human and we're in 2024, greed is such a massive aspect of the human nature. This is something you have to learn to control. Greed can prevent you from winning trades. Greed can also just enhance you losing so many trades because you're not taking your slice from the market in that day. This in turn incorporates fear into the mindset. One half you're thinking about greed and on the other half you're thinking about fear. You've realised you're too greedy in the market and now you're thinking, oh, I'm too fearful of actually entering the trade because I'm too greedy. You have to find that fine balance. So if you enter a trade and it starts losing at this point, you're also fearful and then you're starting to cut your losses because you think it's going against you. But in reality, you've entered that trade because you're trusting your analysis, right? So fear can be so damaging in closing a trade as soon as you hit into drawdown. But trust your analysis, don't close prematurely, let your trade play out. If it still makes sense, it still makes sense. There's been many other times in my past where I've entered a trade because you've got the analysis, right? You trust your analysis, you trust your strategy. And I've entered a trade, it started going a bit in profit and then it started going to a bit of drawdown and then a little bit more of drawdown, and I've closed the trade because I'm like, oh, this is just going to go against me. I'm fearful now. It's going to go against me. I'll cut my losses. As soon as you close that trade, it starts going into your direction because that's your analysis, right? So trust your trades, get rid of the greed, get rid of the fear. Another one of those triggering trading confluences is overconfidence. Now, you can't be too overconfident in a trade. If you're on a winning streak of 10, 11, 12, you have to make sure you don't become overconfident. Now, you think you're a master of the markets all of a sudden. It doesn't work like that. The markets will come back and they will bite you. Every single trade that you go into, have the same mindset. It's a fresh trade, it's a fresh day. The market doesn't care how many win streak you're on, doesn't care how many loss streak you're on, it's not going to know. So you have to approach the market with a fresh mindset, fresh trade, like you've never done it before. Keep the same strategy, and we go again. Now, this does lead me into techniques to overcome FOMO and revenge trading. Now, what is FOMO? FOMO is fear of missing out. Now, FOMO can come in all shapes and sizes. But for me, I've had to adjust my psychology over 5 years now of experience. And I've actually had to adjust my technical analysis and my strategy a bit to release and get rid of that FOMO, because I used to FOMO all the time. Now, how did I get rid of my FOMO? Once upon a time, there's these strategies, right? And this is exactly how I like to trade. We've got a new support formed. We've got a new resistance formed. And this is our range. Now, I don't want to be taking a trade within this range, okay? I need to wait for a candle to close outside of this range. Bingo, we've now got a candle that's closed outside the range. Now, the FOMO trader, they look at this, they enter at the break of the previous wick after we've had too many red flags. They enter the trade, goes into a bit of a profit, and why are they getting stopped out? I'll tell you why. Red flag number 1. We've moved from the top of the range to the bottom of the range. When you see this, there's more than likely going to be a pullback or a rejection. Red flag number 2, we've had 1, 2, 3 bearish candles in a row after the breakout. Red flag number 4, we've had a huge bearish candle, easily over 100 pips. 3 reasons not to enter that trade. However, the FOMO trader enters the break of the wick anyway because, oh, we've had the closure, I've waited for so long now. This could have been 3-hour candles. I've waited for so long. I've had the breakout, I have to enter the trade. They're worried because they've missed the impulse out of the range. Now they're FOMOing and they've got into the trade. They had stops above the current candle and bang, we've printed a bullish candle. The way I got rid of my FOMO is waiting for that breakout to happen. Then just wait and wait and wait. Wait for the bullish candle to form. And then if we proceed to break the previous candle lows, then I can enter my trade at the break of the bullish candle wick. Now, yes, I've given you a technical analysis demonstration, but what I'm trying to say is because I waited, I released that FOMO. I got rid of the FOMO all because I waited. So if you take something away from this, take away that waiting will get rid of that FOMO. Now this leads me into building resilience during drawdown periods. No one likes being in drawdown, it's not a nice feeling, but over time and experience, this feeling of the drawdown gets easier and easier and easier. Now you're probably thinking, how do you build the resilience though? Yes, it comes with experience, so experience is a key factor. One of the biggest things for me was realising that in drawdown, you're more fearful in drawdown when you're not particularly trusting your analysis. If you're confident in your strategy, you're confident in your setup, that drawdown period shouldn't be a period of stress and sweat and anger and worry and fear. With trust in your analysis and trust in your setup, the drawdown period is a natural process. It's going to happen to every single trader in the world. Yes, we all love our trades to go straight into profit with very little drawdown or even no drawdown, but it's near impossible. Markets are made up of making higher highs and higher lows, or lower lows and lower highs. And no matter what time frame you're on, it's going to carry on making them higher highs and higher lows, or vice versa. Therefore, once you're in drawdown, that is just the candle or the structure or whatever strategy you're using. That's it, making the lower lows and the pullback. And only if you're still respecting that previous candle low, then you're okay. This drawdown is just so natural. For example, you have a bullish candle formed at support. Now, what is the probability of the next candle going bullish? Because we've formed a bullish candle, the next candle has a higher probability of being bullish. It's less probable to be bearish. Now, for situation's sake, if we were looking to take a buy for the next candle to carry on going bullish, I would look to take the buy at the break of the previous wick. But for the sake of this demonstration, if you take the buy, which many people can do, and you're trusting your analysis and your setup, you can take the buy at the candle open. Now you take the buy, you go into a little bit of profit, and you go into some drawdown. Now, it makes sense for the candle to go into drawdown. It's healthy price action, it's healthy candlestick analysis structure for the candle to make a bottom wick. Now, as long as that candle doesn't break that previous candle low, you're still respecting the previous candle low. You've had your drawdown. Now the candle's starting to break the previous wick high. We've got some lovely price action. We've got some lovely candlestick analysis. But what I'm trying to tell you is drawdown is natural and it's part of the process. If you're trusting your analysis and your setup, then that resilience in you to manage that drawdown will grow and grow and grow. If you're carrying on being fearful of the drawdown, that's because you're not trusting your setup and you're not trusting your strategy. You have to go away, you have to learn a proper strategy that you're 100% got faith in. And if you're not 100% faithful in that strategy, in that setup, that's why you're fearful of being in drawdown. Now this ties in really nicely to the next section of the psychology behind holding winning trades. Now once you've mastered the psychology behind the fearfulness of that drawdown stage, you've then got to master the next stage, which is when you're winning a trade. How are you going to manage the psychology behind the winning positions? Because that is just as hard and it is not easy. Especially if you're still in that learning phase, which we all are of course, but if you're still early on in your trading journey, it's really hard to take the loss because you're still learning, right? Mistakes are going to happen. And then as soon as you start seeing a winning trade, you're taking it early. You're taking them profits early because you're excited. I've got a win, great. And you've taken 0.1% position. You're happy to lose 3 or 4 or 5 trades in a row. You're happy to lose 2% on all of them trades. 2% a trade. But then as soon as you get in a win position, you've taken 3 pips. Now with a normal win rate from a normal person, that's not sustainable. Again, it comes down to trusting your strategy and it comes down to trusting your analysis. Now personally, for me, there's 2 massive things that have helped me with my winning positions and my psychology. Back with our example of our breakout. So we've had our breakout and then we formed our weak bullish candle after the breakout below support. Now I've entered the trade at the break of the previous wick. Now the candle that I've entered on is already running 10 to 15 pips in profit. Now this is where a lot of people may start to panic and may start to think, oh, do I take it? Do I take 5 pips? Do I take 6 pips? One of the best things for me that helped me with my psychology, if you're already in a healthy amount of pips, what is the harm in taking your position to break even? So I did have my stops below the current candle high. Now I've gone into 10-15 pips in profit. I'm going to move my stops to that break even stage. But what does that do for me? Not only it secures the fact that I'm not going to lose this trade now if it hits break even. The best thing that it does for me is my head, my psychology. I now know that yes, I've got 10 to 15 pips in profit. I've put stops to break even. Now I'm in a winning trade. And now where do I take it to? Number one, you can secure some partials. If you've put your stops to break even, secure some partials, take some of that money off the table. You've won your trade. There is no stress. There's no pressure now on this trade. What you have to do now is look left. Where's your next support? Where's your next resistance? Where does the clean candles run out on the chart? So you look left and then you finally find a new support down to the left. That is where you can leave your runners to run on the charts. As you continue to come down on that trade, you can secure partials along the way. It's so good for your psychology. It's so good to practice your strategy, to practice your methods. And with time and experience, then the psychology behind winning trades gets so much easier. Now, how does this tie into a prop firm? Because prop firms make this situation so much easier with psychology. With Funding Frontier Phase 1, you only need 7.5%. Now that means you only need to win about 7 to 10 trades at 1% a trade. Now, because I've already put a one lot on my $10,000 account on this trade, I only had a 20 pip stop loss, so I didn't risk more than 2%. I've got a one lot running on this trade. I've just made 15 pips in profit. So I put my stops to break even like we just mentioned. Then I've already secured 1.5% on this trade. Let your runners run. Get another 0.5%. You've made 2% on that trade. Close the charts. Come back tomorrow. You've done your job. You've got your slice out of the market. It's so good for psychology. Rinse and repeat that every day for a week or 2 weeks. Yes, you're going to have a loss in there. You're going to have to factor it in. 2 or 3 weeks securing 1% a day roughly. Then you'll get there past phase 1. And then you go on to phase 2, which is just another 5%. Rinse and repeat that same strategy every single day. What is absolutely horrendous for your psychology is if you think that you can pass this prop firm challenge in one day. So you take that one trade that we just did with that example and you go ahead again, you've won it. So you think, oh, I'm a good trader again. You go to overtrading again. You take another trade because you've already won one and then bang, you've lost it. You've just given away your profits again. I'm telling you, once you've got your 1 to 2% a day, close the charts, come back tomorrow, do the same strategy and the same setup. This leads me on to the next section. Creating a pre-trade mental checklist. If you have a checklist before every single trade that you enter, it's going to be so much nicer for you psychologically. And with this, you'll start to see a more consistent flow of results. Number 1, have you done your market analysis? Is the trend bullish? Is it bearish? Within the market analysis, have you checked the news? Check the news every single day. You don't want to be trading on high impact news. What session are you trading? Is it the London session? Is it New York? Do you need volume for your trades? If you don't need volume, you need to look to the Asia session. If you do need volume, you stick to the London and the New York. Number 2, your trade setup. Is your trade setup arising? Does it align with your strategy? Do you know where you're entering? Do you know where you're exiting? You have to have this in your head. You have to have it ready. Jot it down. Make a note of it if you need to. Number 3, risk management. When you're in the trade, do you know what you're doing? Have you got a position where, just like we've said, you've gone 10, 15 pips in profit, you go to break even, you score some partials. Is that part of your checklist? What if the trade does go into profit and then starts going against you, you start getting candles printing against you? What are you going to do then? Have you got your risk management plan in place? What about all the technical confirmations? With your setup, have you got any green flags? Have you got any red flags? For example, are the time frames aligning? Look at the 15 minute, the half an hour, the hourly, the 4 hour, the daily. Are they all adding up correctly? If you've got the 15 minute and the half an hour telling you, yes, take the trade, but the hourly, the 4 hour and the daily is telling you, no, don't take the trade, then you've got conflicting time frames and that's red flags. Leave the trade. And lastly, emotional readiness. Are you in check with your emotions at this point of the day? Have you had enough sleep? If you're too tired and you're feeling sluggish, don't take the trade. Are you feeling calm? Are you feeling focused? Are you feeling free of any distractions in the moment of this time that you're about to take a trade? Is the trade you're about to enter based on logic, not fear, not greed, not selfishness of wanting more money? The trade you're about to enter, is it the first trade of the day? If it's the 5th trade of the day, you've already taken 2 losses, leave the charts, don't take it. You need to be in a calm state of mind, ready to take this trade. Go through that checklist that I've just said, make notes of it, jot them down. So let's say you've just won that trade. You just won that trade you'd taken and you felt good in that trade. How do you know that you'll need to execute that same trade again, feeling them same emotions? You need to do that, rinse and repeat that again and again. Journaling templates. You need to have a journaling template to ensure that you know that you took that trade, you felt good in that trade. You need to remember that trade, remember that setup, remember the emotions. But where are you going to go to? For me personally, I've just switched over to FX Bullsheet where I can journal all of my trades. It's a really nice place, but again, psychologically, it's a great place to be. They have this really neat section where you can jot down your confidence in the trade. Did you feel good in the trade? Did you not feel too good in the trade? Did you feel awful in the trade? For example, in this trade here, I know I felt confident in the trade. I can go over to the screenshot that I took so I can remember how I felt in that trade. I know the setup and I know the strategy. I can go back to that, rinse and repeat. Now this brings me over to our last section of the live charts. This here, before I dissect it, is a prime example of a calculated decision versus an emotional decision when psychologically in a trade. So breaking this trade down bit by bit. Come to the charts and it's pre-London, you form this new support at this area here, and you form this resistance at this area here. Now what I'm looking for is a closure above this area, because we've got clean candles to the left hand side, or candles below because we've got clean candles to the left hand side. So it's perfectly set up. So technically I'm sound. Technical analysis, market analysis is absolutely perfect. We're in the right time zone. We've got our setup nearly ready. Now the emotional trader. As you can see, we finally got our candle closure above the range. As you can see, this is one big candle in a 50 pip push. The fearful trader, the greedy trader, the psychological trader that is not ready to take this trade is going to enter at the break of the previous wick. Because they've had the candle closure above, they've waited for so long already, they need to be in the trade because they have FOMO. The stops are way too big to have below the previous candle, so they go with stops below the current candle, and bang, they've gone into a bit of profit, we've closed bearish, we've then been taken out on the next candle low. Now there are many red flags for why not to enter the trade at the break of the previous wick on the very next candle. Number one, we have one swift movement from the bottom of the range to the top of the range on the closure above, so it's a red flag, don't take the trade yet. Number two, this is one big 50 pip push. It's so unreasonable to have stops below the current candle where you should have your stops for a safe entry and a clean setup. So we've already moved so far above the range already, then it's more likely that you are going to have a pullback. Now that emotional trader and not psychological ready trader has already been taken out of that trade. Now the trader that is in a good psychological state, they've done their checklist, they've had a good sleep, they're in an environment where they're ready to take the trade, it's their first trade of the day. Step 1, they've waited for the candle to close outside the range. Step 2, they've identified that we've moved way too far already in that one candle. Step 3, they're awaiting a weak bullish candle after the breakout. They get the weak bearish candle printed and now they're ready to see what the next candle does. This is one of my absolute favourite setups after the weak bearish candle after the breakout. As you can see, the next candle breaks the previous low, enticing sellers into the market. We then proceed to break up after our breakout and break the previous wick high, which is where the sensible entry is. Stops go below the current candle low. We can have initial targets at the very top of the clean candles to the left hand side where we've got this previous resistance and a sweep with the Asia highs. So here you can see we had two psychological traders, one that was psychologically ready, one that wasn't psychologically ready. Prop firms are out there and designed to give you sound risk management within your trading. It's been the absolute safe haven that's allowed me to become a full-time trader. Without prop firms, I would not have known that I need to just risk 1 to 2% per trade. I would have been over leveraging, over trading on every single trade all the time. I was there and I've done it. But with the sound rules in place, it's allowed me to become a very good risk management trader, and psychologically it has helped me so much. So that brings it to an end and concludes the video, guys. I hope you've really enjoyed it, the psychological masterclass. Stay tuned for next week's video. Please don't forget to leave a like, subscribe, turn the notifications on so you don't miss out on the next video to come.